Hello, this is Edward Slavis with eXp Realty. I'm the team leader of the Slavis Group, and this is your DMV real estate report for November of 2022. This month, we're going to focus just on Washington, D.C., not on Maryland or Virginia. If you have questions about any neighborhood or county there, let us know. Happy to share that information for you as well. But this month will be just Washington, D.C. We will start, as always, with interest rates. This data is courtesy of Zillow. The good news here, and this is for a 30-year fixed, the good news is rates, at least for now, are down from a peak above 7% to now about 6.35% on average for 30-year fixed. The two new lines on this graph are for a 10 and 15-year fixed. Obviously, a shorter loan, less risk, better rate. Most buyers are still choosing the 30-year fixed as the preferred vehicle to buy a home. As always, the caveat here is this is a national average. This varies from location to location and person to person, market to market, person to person. So if you want to know how you qualify, reach out to us. Our contact info is in the description below this video. We're happy to put you in touch with one of our preferred lenders, and they can look at your file, your credit, your debt to your income, your debt to income ratio, and tell you exactly what you qualify for, how much of a house you can purchase, what your monthly payment would be, what your options are, etc. So we'd love to put you in touch with one of our lenders. You'll be in very good hands. Again, this is just a national average. Good news is rates have come down. We hope they stay down, of course. Anyone's prediction, what will happen. So this graph here is the number of closed sales broken down by month of all home types in Washington, D.C. With the exception of one graph, which I'll show you in a second, or one chart. This is all home types, so condos, single-family homes, detached, row homes, everything kind of combined into one. So you can see that the total number of closed sales has decreased here in the last 4 months. We'll talk about, is that cyclical, or is the market really slowing down? This graph is not upside down. This is the closed sales, the year-over-year change. So the number of homes in July of 2022 were about 27% less than the number of closings in July of 2021. And as you can see, with the exception of November last year, for the last 11 months, the number of homes year over year that have closed were less than the preceding month of the prior year. This was happening before interest rates started climbing higher in February of this year. So overall, the total number of homes selling is substantially, consistently about 20% less than the previous year. This is the one chart where it's broken down also by home type. The reason why I show this is in previous videos, if you saw them, a lot of times we talk about prices and we'd say prices have gone up or decreased. But if you split it between single family home and condo, you can see that those lines diverge. This is now true, as I'm showing here, for all, regardless of the housing type, the total number of homes being sold has decreased substantially from last year and has consistently done that month after month after month for the entire year. What about prices, though? These are the median prices on the side here. Pay attention to the graph. This is from the axes from $500,000 up to $750,000. So you can see seems fairly consistently about $650,000 median price of all home types. This is that year-over-year change. And for the first 6 months of this time period, right, interest rates started climbing up right around here. The average price was about 4 to 6% higher than the previous year. In the most recent 6 months since May, we have seen average prices come down. I will say I'm surprised that all 6 of these are not negative numbers. I think it does go to show you how resilient the DC market is, but prices certainly have come down. Now this is the median price. What if we look at the median price per square foot, broken down by month for the last year? This is now that same chart, but going back 2 years. You can see a little bit of a sign pattern going on here. It doesn't look that off, but again, if we look at this last year, year over year, June was about 3% higher. Then we've had 4 months of upwards of 5% lower on price per square foot. Price per square foot is usually a more accurate recorder of value because it takes into different account the differentiation in size of homes. So again, further evidence that prices have come down in, really over the last 4 months. How fast are homes selling? The axes on the side here, you have 10 days. If the line is below that, basically the median house is selling in 1 week. So for broken down by month over the last 2 years, we had many months where the median house was gone in a week. You've all known or perhaps experienced that market. Now we're starting to see some months where things are climbing up to 15, 20, upwards of 25 days. Keep in mind that 20 days is still the median home selling in 3 weeks. So that's still a very good market. But again, compared to things selling in 1 week, it seems like things have slowed. A lot of that is the perception and kind of where we are coming from. If we look at the year-over-year change in median days in market, you can see that in 2020, in the first few months of 2021, everything was selling fast in the previous year. And then really starting last July, the market has been slowing down. All these homes are staying on the market from about 25 to 50% longer. Again, when you start with 10 days, 50% longer is only going an extra 5 days. But from the market's perspective, it has been a fairly sizable shift where homes are now staying on the market longer. This is what we call months of supply. Months of supply is, again, this is by month for the last 2 years. Months of supply is calculated as let's say you have 50 houses on the market and you're selling 25 a month. If no new listings came on the market, all of those homes would sell in 2 months. We call that 2 months of supply. Keep this in mind when we go and look at the last 5 months. We're now above 2, pushing on 3 months of supply, right? The supply looks to have been fairly increasing since January of this year. In general, we consider that if there are 5 months of supply or less, it's a seller's market. So again, it's the perspective you're coming from. We are used to just having less than 2 months of supply. Now we're getting up towards 3 months, and we consider that a cooled market. By most standards, this is still a seller's market when you look at months of supply as your metric. Now, are new listings coming on the market in the same level that they used to be? New listings of all types broken down by month for the last 2 years. And let's go and do a year over year. Now, this is just for the last year. So these look fairly even here, the left half of the chart to the right. If you look at a year over year, you can see that with the exception of March and a little bit in July, overall there are far, far fewer homes being listed compared to that same month last year. So in October of 2022, you had about 18% fewer houses even enter the market than the previous year. So what does all this mean? To recap, fewer homes are being listed. We know this from the data. We also anecdotally know this from our clients who are homeowners who are saying, I want to sell, but maybe next year. They're waiting for that super strong market to recover. Keep in mind, again, there's not even 3 months of supply. We are by all means still in a seller's market, but they are waiting. So fewer homes are being listed. The home sales have slowed. The total number of closings has gone down. Inventory is up. Obviously, prices are determined by supply and demand. Less demand, more supply. The prices have fallen. I added in that modifier slightly because if you had asked me at the beginning of the year if rates go above 5%, above 6%, above 7% and stay there over the course of the year, how much would prices have dropped at Thanksgiving? I would have guessed a lot more than they have. Again, the market is resilient, which we are grateful for. So what does this mean for sellers? If you were thinking about selling your home, it is still a fine market to sell in. Again, we're not even at 3 months of supply. It's still a seller's market. The prices are have not really fallen. If your home is properly prepared, priced, marketed, showcased, negotiated, you will still get the price that you want. If you want to wait, of course you can, but if you are really feeling like you need to sell now for a personal or financial reason, you do not need to worry. Your home will still sell. A lot of it, of course, depends on how well you prepare the house, how well it is marketed. We, as a Slavis side, have a new program we'd love to talk to anybody about that may benefit from it. We've partnered with a company called Curbio, where if you want to make repairs to your house, we can go and make those repairs. You will not pay any money up front. They will just get reimbursed at settlement. So it's a very, very valuable tool that we are sharing with our sellers now. The program is about a month old, so I introduced that to you. If you are considering selling your home or know someone that is, we would love to meet with you. contact us today. Happy to have a private consultation and or home evaluation and let you know exactly what your home would sell for in this market and how we would get it there, what we need to do ahead of time in terms of preparation and pricing strategy. What does this mean for buyers? This is the best time to be buying the last 10 years. Right? You finally have some leverage. I would still consider it a seller's market, but it is not the seller's market it's been, for the last 5, 6, 7 years. So before you might have 10 offers on a property. Now maybe you have 1 or 2, maybe you have 2 or 3, but you can make an offer without, sacrificing your right to home inspection or your right to appraisal and financing. You finally have some leverage. You may pay a slightly higher interest rate, but 2 caveats on that. 1, the interest rate is higher than, again, we've seen the last several years. Over the last 30 years, interest rate average is above 6% anyway. So historically, you're paying a very average rate. It's just, again, the perspective we come from, it's higher than what we've dealt with the last few years. Also, you're locking that rate in at 30 years and it will never go higher. So if rates drop to 6%, you can refinance. They drop to 5.5%, you can refinance again. Your rate is a ratchet that's only going to go in one direction. It will only come down over those 30 years. So you can lock into a good home value now, get a home that maybe a year ago would have a bidding war. Now you can lock in at a fair market price. And again, that rate will come down over time. And we're happy to talk to you about the cost of refinancing, a little bit more about this buying strategy. But overall, although it's a seller's market, I still think this is the best time to be a buyer in the last 10 years. So if you're interested or someone you know is interested, again, reach out to us. All of our contact info is in the description below this video. That is it for this month. As always, I hope you found this informative. Like and subscribe. Let us know if you have any questions. And a happy Thanksgiving to everyone. Thanks for watching. Bye.